Hello to all traders and welcome back to another market review brought to you by Orbex. So we're looking at oil today. It's something we haven't really looked at in the last few weeks because it has been on a bit of a downturn since OPEC did announce that they were tightening their supply for the remainder of the year. We saw a big jump and a big gap in the market at that particular moment. But since then, we've retreated back down to roughly about $70. And with the US debt ceiling and also with OPEC's next meeting, we have had a bit of a sentiment change on where oil is going. Don't forget, OPEC did make this decision on the basis that oil pricing was getting a bit too low and they needed it to be a little bit higher, hence the announcement that they will be cutting supply for the rest of the year. But since then, looking on the markets, it hasn't really gone to plan. We have had quite a big drop in the black gold, and we're just seeing now another big detrimental downturn in yesterday's trading, roughly down about 4%, just over $3 in value. And we're just now looking at what the likelihood is that we could sink back down to $60 a barrel in no time at all, especially with the US debt ceiling really going on and on. Janet Yellen did say there could be a default in the first week of June, which we are approaching. Obviously, it's the last day of May today, and we're going to see where that's going to lead us as well. So straight onto the charts then. On the daily chart, with the assistance of the Ichimoku cloud, as you can see here, we're trading vastly under the clouds. This gives us the reasoning that we will keep on pushing lower. And as you can see here, this 3 to 4 drop value in drop in yesterday's trading hasn't really helped matters with where price action is going. This is for bulls especially. So let's just take us back a little bit. This is when OPEC did announce that they were going to start cutting production. And obviously with that, there was a natural gap and an upsurge in pricing. But that only lasted until roughly the lower end of $80. And since then, we've had roughly a $10 to $15 drop. If we look at the recent price action here, and then another move to the downside now. So we're heading just below $70, sorry. Not really many divergences on the RSI. We're just seeing now whether or not our indicators, MACDs and other stochastics that you're using, if we're going to start having a look at where the next signal is. If we're looking on the 4-hour chart, especially at the moment, we're just seeing a little bit more of some value in where the next movement is going. So if we just drag this out a little bit, so it's a bit easy to see. As you can see here, very detrimental day for West Texas Intermediate yesterday, and it's not really looking likely that we will bounce back anytime soon. We're having some slight consolidation now for the morning session. Whether or not we get a signal that it's going to start creeping past $70 and back to the mid $70 range that we saw this particular top remains to be seen. But yes, with the debt ceiling and other factors that OPEC are just hinting that they could even cut even more supply for this year because of the price action, we could now be looking at a full reversal on West Texas Intermediate at least, and we could be heading back down to $60 before we know it. So just keep an eye on all the headlines that, excuse me, could actually start affecting the movement of WTI or crude oil. We'll just look on Brent as well. Brent is moving a similar way. Just wanted to report on it though, because we do have a few clients trading on Brent as well, even though crude is more of a popular commodity because it's moving quite a lot. So again, when OPEC did have the cut, we saw a move to the high end of $80. But since then, as you can see, we're just seeing now it was developing a slight bullish channel, and we could have some firm support, but it just depends if it's going to keep lasting and if we're going to have that move to the downside as well, like we did on WTI. We'll have to wait and see. But again, with the assistance of the Ichimoku cloud, very heavily moved by very heavily pressured by the bottom border of the cloud, meaning that if we don't get an engulfment and a move higher, then this could actually be a firm resistance before we have another leg lower. So this is what a lot of traders and economists that I've been speaking to are looking likely that's going to happen. It's what I think is going to happen as well, but obviously we'll have to see what's going to come out of this big move that saw yesterday's drop quite significantly down. If we look on the 4-hour chart, just briefly, as I said, this channel that's developed, we are seeing possibly another move higher now, but it just depends if we can get past the $80 range, and this will give us more of an upside move. I doubt it's going to happen, but obviously we'll have to keep an eye on the headlines. We are at the lower region now. To move $10 by the end of the week will be quite a stretch, be quite difficult to do that. But you know, other things have happened in the market that have shocked us in the last few months. So do expect anything. But we'll keep you up to date with all the oil movements as well. Obviously, we reported on gold and dollar yesterday. We're just going to see what the debt ceiling crisis. What comes out of it, if we can get a deal done by tomorrow. If not, will there be an extension? And will Janet Yellen keep on saying that they will have a default in America, and America losing its credit status, which will be quite significant as well? So we'll keep you up to date on that on our Telegram channel and our YouTube channel. So stick with us, stay ahead, and we'll speak again next time. Bye for now.